Imagine you're an explorer searching for hidden treasure. The stock market is your uncharted territory, filled with potential riches, but also fraught with pitfalls. What if you had a reliable map to guide you to the treasure? William J. O'Neill's How to Make Money in Stocks offers just that, a proven strategy to navigate the market's complexities and uncover its hidden gems. Welcome to this episode of the Book Club, where we'll delve into O'Neill's renowned Can Slim strategy and how it can transform your investing journey. William J. O'Neill is a trailblazer in the world of investing. As the founder of Investors Business Daily and William O'Neill Plus Company, he has dedicated his career to researching and understanding the stock market's intricacies. His book, How to Make Money in Stocks, distills decades of market analysis into actionable insights, helping millions of investors achieve financial success. At the heart of O'Neill's approach is the Can Slim strategy, an acronym representing 7 key traits that top-performing stocks exhibit before making substantial price gains. This method combines fundamental and technical analysis to identify high-potential investment opportunities. Let's break down each component of CANSLIM. Think of a company's earnings as the fuel that propels its stock price. The C in Can Slim stands for current quarterly earnings. O'Neill emphasizes that leading stocks often show a significant increase in EPS, typically at least 25%, in the most recent quarter compared to the same quarter the previous year. This surge indicates robust performance and can signal a stock poised for growth. By focusing on companies with strong current earnings, you're identifying those with the momentum to drive their stock prices higher. Examine the latest earnings reports of companies you're interested in. Look for those with a 25% or greater increase in EPS compared to the same quarter last year. Imagine building a skyscraper. A solid foundation is crucial for long-term stability. Similarly, A stands for annual earnings growth, which provides a foundation for a company's sustained success. O'Neill suggests looking for companies with annual earnings increases of at least 25% over the past 3 years. This consistent growth demonstrates the company's ability to perform well over time. Consistent annual growth indicates that a company isn't just experiencing a temporary boost, but has a solid track record of performance. Review the annual earnings of potential investments over the past 3 years. Identify companies with a minimum of 25% growth each year. Consider a surfer catching a wave. Timing is everything in investing and represents something new, a product, service, or management change that can propel a company forward. Innovations or strategic shifts often act as catalysts for significant stock price increases. Identifying companies introducing groundbreaking products or undergoing positive leadership changes can lead to lucrative investment opportunities. Stay informed about companies launching new products or services, or those experiencing leadership changes. Assess how these developments might impact their growth trajectory. Picture a rare collectible item. Its scarcity increases its value. In the stock market, S stands for supply and demand. O'Neill points out that stocks with a lower number of shares outstanding can experience more significant price movements, especially when demand is high. Let's quickly recap the Can Slim strategy. C. Look for companies with strong current quarterly earnings growth. A. Ensure consistent annual earnings growth over several years. N. Seek out companies with new products, services, or management changes. S. Understand the balance of supply and demand for shares. L. Focus on leaders within top-performing industries. I. Check for increasing institutional sponsorship. M. Align your investments with the overall market direction. By combining these 7 principles, you create a comprehensive framework for identifying high-potential stocks and timing your investments effectively. Even the best strategies require risk management. O'Neill highlights the importance of setting stop-loss limits, typically at 7 to 8% below your purchase price, to protect your capital. Think of this as wearing a safety harness while climbing. You're prepared for a slip, but still aiming for the summit. Remember, the can slim strategy is not about chasing every opportunity. It's about being disciplined, following your rules, and cutting losses quickly when things don't go as planned. Set stop-loss orders on your current investments and review your portfolio regularly to ensure it aligns with your financial goals. William J. O'Neill's How to Make Money in Stocks is more than just a book. It's a masterclass in disciplined, data-driven investing. The can slim strategy has helped countless investors build wealth by identifying high-performing stocks and avoiding common pitfalls. If you're ready to transform your approach to investing, grab a copy of How to Make Money in Stocks and start applying the CANSLIM principles today. And remember, the stock market rewards the prepared and disciplined investor. The information in this video is for educational purposes only and should not be considered financial advice. Always consult with a financial advisor before making investment decisions. Thank you for joining this episode of the Book Club. Don't forget to like, subscribe, and hit the bell icon to stay updated on our latest reviews and insights. Share this video with friends who are looking to level up their investing game and let us know in the comments. What's your biggest takeaway from How to Make Money in Stocks?